Thank you for coming on into the live and sharing your essence with me in this eternal moment, which we all share, an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So it looks like it's getting rejected off of the 0.5 equilibrium to come into a supply zone for a bullish order block potential bounce. We put out the idea of a double bottom forming after the FOMC short squeeze meeting, after the slight dovishness response to the statement of there being infrequent meetings. So let's go ahead and take a look at the liquidity. What is this little bit of happiness? It's high block capital. What is high block? Well, people lock their liquidity in the charts to get burned to a crisp by the market maker, and we get to see where those crispy characters lie in wait. So let's go ahead and do that today. So as we saw after the Fed meeting, there was a short squeeze up to the projected zone of that 517 million at 29,522, and Did we go slightly above it? I believe we did. I think we got that pinged in liquidity up here at 29,665, this $101 million pool.
Fatality.
And that's what they do. They come back and they hit those stop losses.
Why you hitting my stop loss, man?
And that's what happens. We got shaken out due to the not wanting to be in a trade during the FOMC, but if you had just traded our oscillators, would have been in profit. As it is back tested for a year and a half to be the case. They don't care about the meetings, it's just the math. So as they pinged in, as they took out the short liquidity, there was pinged in more long liquidity down below, and they came down to 29,413, grabbed that, bounced off his carcass on the 100x, and then they started to meander their way on down to these other trapped pools below. And let's go see where they're heading, potentially speaking, down below. So they went and grabbed this 87 million pool at 29,102, and are they going to go down to 29 even and break down at the wick and start to take out these pools? It looks like that could be inbound for Run for Profit Friday here in Japan. So if it's setting up for midweek reversal / Run for Profit Friday. So there wasn't really much leading into the FOMC, was sideways, and then they went up slightly to make a leg down, potentially into this pool down here at 28,592. There's 222 million still sitting there off the wick bounce here, so they could come stop out these characters with a thorough double bottom extended W before they peel out. So let's go ahead and look at the higher time frame, expanding our vision to the 7-day pools. Thank you for coming on in, everyone. Booyah, what's up, CNC? Hope all is well. Still working on the formula, trying to get some perfected visuals, representations that make sense consistently. So yeah, the 7-day time frame insinuates coming down to 28.7 to grab about $12 billion down in the 28.7 range. If we go to the chart on Binance, we can see if that coincides with the levels. So we have this bearish trend-based fib extension tool that we like to throw on. We go over that quite often on the channel, the 3 clicks, the impulse, and the retrace, and based off of how steady an impulse and how weak of a retrace projects your math out, in this case to the downside. So you have this impulse to the downside, the retrace, which only took you up to here, insinuated we wanted to go down. We went down to that one level of that bearish trend-based fib, especially once the 236 entry model was observed, and it observed it pretty thoroughly with the candle closes beneath it at the 30,107 region, and boom, we broke down like a car in the Death Valley desert and went down to that 29k region. Then we meandered back up to the 0.65, and it looks like we're just continuing our way down, potentially into this pocket region of the bearish trend-based fib level. Okay, so the liquidity on the higher time frame suggests that if we do start to break down and lose these daily support levels, then you have more liquidity down below at the 27.5 region, double digits down there. But if we start making these lower lows and the narrative structure shifts, then you have these higher time frames of the 3-month to think about, with the sub 24k imbalances of a potential Bart Simpson down below. Particularly on the 6-month, you have these pools down here, 142 billion at 24.6, 180 billion at 24.3. So that could be entirely possible. And if we start to expand our vision to the 2-year, this is where I'm starting to think about some stuff that might catch people off guard. They do have 175 billion of at 32.4, 181 billion 32.8, and 197 billion 33.2. So before a genuine drop, I was thinking they bounce it up to here, spawn some divergence off of this, then make their way down to these regions, because these guys are in profit. But there is a huge amount down at 24.4, $241 billion, down at 24.4 at the 2-year time frame. But the imbalance on the 2-year time frame looks like it could come up to this region at some stage. Let's take it one step at a time though. The bounce potential at the 7-day time frame down here at the 28.7 region. Let's go ahead and throw on our oscillators and then we'll bid you adieu. We're going to make this a quick update as I do have to take my son to school in the next 30 minutes. By school, he is in preschool, so it's not like a big deal, but still I want to be on time for that. So let's go. Heads up display on, and momentummaster.info, link in the description for more. Scroll down to features, toggle everything you'd like to see. In this case, for the bounce into the FOMC, we featured the stochastic array, never before seen formula which monitors more than 7 time frames of information considering over 32 different indicator values, determining exhaustion points across all significant time frames. So that's why when you see these X's with the diamonds, the X's with the diamonds do represent that quick guide idea. These X's are nearly all time frames, particularly 1 lower and 3 medium time frames, and the diamonds are mainly at least 1 lower and 2 medium. So if you get these, you're getting exhausted on the medium time frames. If you get the circles, you're getting the lower time frames. These symbols do have a meaning, and they express when you get that 5 and 6 region that you are getting to that exhaustion point. And we started to see 4-hour time frames close with that 5 time frame exhaustion point with the cross up event. And so it didn't care about the FOMC meeting, it just went up, oops, by that percent. That's why I entered a mock long and got scared out of my long, but could have just held it for a 2% gain on that alone. So as we come back down and retest, and we're starting to break down at the baselines on the 4-hour, let's see what's going on the daily time frame. So the daily time frame will close in the next 50 minutes. We're still seeing the suppression from July 2nd of the baseline cross down event. You're getting a thinning of the cloud, suggesting that even if we do bounce, this could be a kind of bearish retest region, and then you come down and make lower lows. Hey, what's up? I'm in the middle of streaming. Can you keep the volume down? Thanks. Alright, so if you're at the... Hi, what's up? I'm your papa, that's right. So if we look at the money flow coming out from the disparity coming from the RSI, you can see that this is getting a potential double bottom. You have this kind of rounded, and it's like a Eve Adam kind of thing, but you haven't gotten to these points where it is oversold on the Williams and the stochastic RSI in quite some time. So the daily time frame is insinuating a potential of a retrace here. If you look at the impulse out of this region from the 24K region, we have a 618 level at 27,294. To be thorough on the time frames here, we're going to go to a monthly and see if there is some order block potential of supply zone in that region. You have double digits at 27.5, but the liquidity tapers on the monthly time frame. If we look at the 3-month, you do have double digits and upwards of 45 billion down to 27.2. So coming down to this 618 could be some recovery of all of these vectors here, and you could find some last support within the retrace of this golden pocket zone. if that does break down. So if we look at the daily time frame, the daily time frame is about to close. You're getting extremely oversold on our oscillators. If we look at the 3-day time frame, 3-day time frame cross down event is in effect. It closes in 2 days. It already closed, and with that close gave you the confirmation of the cross down. So are we going to see a huge drop here, as we saw with the last cross down event here on April 16th, and that gave us 60 days, was it? Yeah, nearly 60 days of downside after that cross down event. We're getting the alarm on the 3-day as well, which is possibly spelling this reset of the Williams on the 3-day time frame. So that is a higher time frame possible suppression idea coming at you. So you could be catching a falling knife if you are looking for long, so please be aware of that. There is that sub 24K liquidity that if we do make that burst to the downside, they would be buying at taking out these candles down below. So if we go to the 5-day time frame, let's take a look at that real quick. 5-day time frame closes in 2 days time. As it stands in this moment, you're getting a shooting star to the downside in the cross down event on the Williams, and the potential of the suppression of the stochastic RSI. Let's take a look at how the weekly is doing so far. Weekly time frame, thin KD lines on the stochastic. The money flow is coming beneath the RSI in a manner here, and this is kind of what we're looking at with this new script that I'm working on. I'm making something called Optima, and it optimizes different time frames as it stands in the default. It's for scalping, but you can set it for multiple things. So if we go like this, 5, 15, 30, 1 hour, and let's just do 33 minutes or whatever, and then you do that, it's going to calculate everything on a 5 time frame basis and give you kind of levels on that idea. So it's an averaged formula of 5 time frames that I'm still working on, but it is still in testing phase, so that's why I've been kind of focused on that at the moment, because when you reach like an idea point with it, you can't let it go, or you let the idea go, kind of like inspiration. So anyway, back to the weekly. You are overbought on the Williams, and the KD lines are getting thin. However, the bullish scenario is the money flow coming beneath the RSI here. This could insinuate an insertion of money on the weekly time frame coming soon. This is once again Run for Profit Friday. Are we going to see a stab up at some point to stop out the shorts? Let's go back to the daily. So the daily also has that money flow coming beneath the RSI here, and the oversold nature of the stochastic getting suppressed, and the Williams also in oversold status in a place we'd like to see it. If we look at the 22, our Treasure 22 does have a cross up event that is still holding on the baselines here, getting some ambiguousness with the stochastic RSI. The money flow is looking fatigued as it comes above the RSI here, and the lack of vigor that came out of this double bottom rising sun is showing signs of weakness on the 22, continuing potentially lower. If we go to the 12-hour time frame, 12-hour closes in 43 minutes alongside the daily candle close. Just to note, all time frames close at the daily candle close, so it is a good stochastic reset, if you will. Pushing into the daily candle close does give opportunity sometimes for some smooth entries or some smooth pushes ups into the close, so you can get these like bottom potential scalp ideas if you know what you're doing. And the 12-hour time frame starting to attempt to take off here, getting a engulfing on these two candles with the bearish engulfing and the lack of rising sun event on the 12-hour time frame. So this could come down to the adaptive slash wick that we were talking about last stream, and we could be coming into this supply zone. If we go to the 6-hour time frame, 6-hour time frame cross up event is still confirmed here, and you have this baseline attempting to hold 3 time frames oversold here on the stochastic array. Those 3 time frames with the circle imply 2 lower time frames, which are the 5 and the 15, or 5 in the hourly here, and then the 4-hour is also oversold. So these 3 time frames, it notifies you to your phone. And then if it closes in that state like it did here, this is an extreme rubber band being stretched in its elasticity to its maximum, and then it starts to rebound from that point. So the higher the time frame that this stochastic array closes, the more likely it is to rebound, in my humble opinion. So if you get daily candle closes, let's just go back so how you can read the stochastic array. So the stochastic array does this on the 6-hour time frame here. You see these 4 time frames oversold. That implies these higher time frames got fatigued, 4 of them, to this level, and then it wasn't going to see any bottom, even though there was a wick there to that point. And so it started to rebound out. So when you start to get these on it closing on the higher time frame, it's something to note. Here was a 5 time frames oversold, closed on the 6-hour, and zoof, we shot out of there. And if you see that again, 5 time frames oversold on the 6-hour. So the higher the time frame that these stochastic arrays close, the more likely it is to play out. Here we had rocket ships that closed on higher time frames, and sure enough, they played out with a fury. Market reversals, actually. So the higher the time frame, of course, when you go into the time frames, you're going to see them all over the place, but that's only as strong as the candle that it closed in, you see. So if you go to the hourly time frame, you see them all over the place, but even still, this was screaming the upside, even though people were calling for hawkishness. And that's why we talked about these 5s and 6s being some sauce. So this is the schematic at Bitcoin's bottom, and it looks in this fashion for a reason. And you start to see these, you need some conviction out of here with the double bottom out. It always creates a double bottom. Here was a shallow double bottom out. Perhaps in this case we're making a double bottom that takes us lower. But if you are going to see a structure where you have a shoulder head and a shoulder out of here for a continuation to the upside, it's going to look similar to this. Everything's fractal in nature and how it displays itself. This was a market reversal, so there were rockets at this time, but the 5s and the 6s do lead you to some gains on a upside play. 2.8% ain't bad from these bounces. And yeah, so if we go to the hourly time frame starting to get oversold here. Money flow beneath the RSI on the hourly. If we look at the 4-hour time frame, starting to come down here. Everyone was calling for bearishness, like the 4-hour time frame is just getting started, and that may be the case. You do have the money flow above the RSI here, and MACD starting to cross down. Williams not taking off with that double bottom that he put in there. The baseline's also starting to fail with the potential cross down inbound if it does start closing 4-hour candles beneath this zone. So we could be losing the 4-hour support on this upside play. Hourly cross down event had you at hello from back here on Thursday, basically, as we fatigued above the baseline. So in terms of watching entry models from the hourly time frame, when you see these candles close beneath the baselines, if you're in a long, considering to cut your trade, or if set the stop in a profit, or potentially reversing, is where you want to think about it. And we're starting to see a rejection off the fat boy here, but we did reclaim the thin boy on and the money flow, getting to a position of disparity between the RSI here with the double bottom event. So coming a little bit lower on the hourly, the maximum before starting hourly bounce could be inbound. Let's go see what exists above. We do have 100x shorts that are up in the region here. 71 million up at 29.36, although the current stacked zone is down below at the 29 even region and even lower at the 28.92 and go down to 28.85 and even lower with that 222 million at 28.59. So clearing this region could be the case, but coming up into these 100xers to refuel off of a bearish order block and then go down into this region could be inbound. So we're going to remove this. It's done its thing on the 29.2 region. And it could be coming down to the 28.864. That wick, recovering this wick. So there's a lot of longs liquidity supply in this region that it could come down into. This is the 15 minutes starting to come down. You had bearish divergence, hidden bearish on the RSI here. So you had a basically lower high, higher high, lower high on the price action, higher high on the RSI off the cloud. So you could be getting rejected here and coming down on the RSI for the 15 minute. If Asia decides to dump it, so Asia generally here you have Asia pump, fade into London, London hand off to New York, and then they pumped it up. So you have this pump dump to London. It's kind of this changing of the guard of the liquidity providers between the sessions. So if Asia pumps it up and then fades it a little bit higher into London, and London consolidates and positions in that accumulation range, hands it off to London, they start to go up, then this insinuates kind of upside. So you rarely see three of the same move. So if Asia dumps it and then you watch for a story between the sessions. So how does Asia take it from here? Does Asia pump it up and then hold the region into London, or do they dump it down further and then give London? If it comes down to this region, during the Asian session, I'm more of the mind that it could go higher at that time. If we look at the 3 time frames oversold does give bounces sometimes, but these 5s, man, if they get into that zone, that would be idyllic. If it comes into this region, you do have fair value gaps up in these vector candles, but it could be starting that reclaiming of this wick idea. And yeah, basically unchanged from my analysis on the FOMC. I said it would spike up and play these games and then go up and then possibly come down to reclaim this. So nothing has really changed from my analysis from before. Just giving you an update, but the money flow is coming beneath the RSI here. I'm not really in this region personally, not interested just yet. I got interested here and I was right in my assumption, but all the wick whacking had me, the choppiness just got me out before I could see my projection to fruition. And this is a pocket. Yeah, we're currently experiencing a 706 bounce, but it's very lackluster. So we could be doing a deep retrace into this region down into the 786 and below 886, or just entirely break this impulse all the way down to the wick itself. So I'm not really seeing the conviction off that 706 bounce here. So it looks like it could be coming lower. We have the bearish fib level of we broke these resistance levels of we couldn't come out of that 0.65. We got the trapdoor release at 706, and we're starting to come down possibly back to the 1 and the 1382 levels on the bearish trend-based fib level. So coming down into this pocket is what I'm looking at currently on that 7-day time frame reclamation of some liquidity. So this could just be a pause for some sort of downside continuation play. And that's my story, and I'm sticking to it. I got to take my son to school, so I don't have time to do a thorough analysis. Apologies on that. We'll just go take a look at the total. Total did not make it above that 236 zone of talking about bullishness. We were saying that you need to get above that region of these lines, which we did not do. So this is the opposite of bullish. This kind of heading back down into these regions below, potentially speaking. This is your 236 model for bearishness. If you cannot get above this level, this is bearish. Bullish narrative begins above that level, which we did not do, so your bearish tones are set still for downside on total. If we look at total 3, similar idea there. We went over that, and the Bitcoin dominance is actually dropping as people step out of that, and looks like they're going into USDT. So they stepped out of Bitcoin and sitting on the sidelines, much like I am in USDT. So this makes sense for the narrative, people getting out of Bitcoin, sitting on the sidelines, waiting for another level. So the dominance dropping while this is going up. People are leaving positions and sitting in neutral based off of this on the dominances. If we look at the dollar went up yesterday. And if you recall, during the Fed meeting, Powell was saying they will be taking some of their profits on securities. So that was the noteworthy thing to think about, is during the meeting they said the Fed would be liquidating some of their positions in securities. So look for them to take profit and reinsert into the dollar, a la NASDAQ. If you look at the NASDAQ futures, they took some profit off of that yesterday, and boom, took it to the downside. So that taking profit on their positions could be what is causing these bounces in the dollar. And so if they're selling off their positions in Bitcoin as well, they could be taking some profits to reposition to another level. All right, ladies and gents, have a good day. Thank you for coming on into the live, sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and we will do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on the flip side. Peace.